Tony, I might get you to start now to talk about wealth strategies to turn a crisis into an opportunity. The team just outlined lots of information behind the scenes. What do we need to start to talk about as at an individual level, as mums and dads, as business owners, as people trying to achieve our own financial goals, give ourselves some security, look after the family, pay the debt down sooner, and start to build that wealth and use those strategies and information that the gentleman just shared with us. How do we start to do that at a personal level?
Absolutely. It's firstly, structure your assets wisely, as this graphic shows. So, there's complexities and there's high levels of complexity. So it's not easy out there navigating this, especially by yourself. And that's where, going out there, getting advice and saying, well, okay, which, in fact, out of these areas, where do I invest my money? Is it within a family trust? Is it within a super or a self-managed super fund? Is it within the company structure? Or is it in my own personal name? And so that's important. But before we even get to that, it is actually looking at, and I'll go through this slide here, wealth strategies to turn crisis into an opportunity. So seek personal financial advice. Go out and see someone, see your Medorus advisor, and even just call them up, have a catch up and just have a chat and say, look, am I heading in the right direction? Understand your investment strategy. So knowledge empowers well-informed financial decisions, and making sure, that when you come in, and we have this with our existing clients, come in and the time that we spend is providing them the education and, talking to them through what's happening in the economy, what's happening with their portfolio, but also, moving forward, much like Lee and Greg have spoken about, what does the future hold based on the numbers at the moment? Stick to the plan. The equity markets, I won't say can be, they are irrational. Don't try and predict its behavior. As we spoke about earlier, you'll never get it right in terms of saying, as Lee's just said, there's no one ringing a bell to say, well, okay, this is the lowest point in the market, time to jump in. So it's about saying, well, okay, what's the plan? And if you stick to the plan actually works. And we've got clients that are listening on here that have been part of our business for over 35 years that are in a significantly better position as a result of just sticking to the plan. Bouts of volatility are normal. They often create opportunities for future wealth growth, and that's certainly the case. And as I said at the start, and events will happen. GFC type events. You had an oil crisis back in the 70s, Great Depression in the 30s. These sorts of things will happen. It is making sure that in terms of your portfolio, and one of the questions was, and actually one of the questions, how do I position my portfolio for this? It's about getting strategic advice. It's about sitting down with your advisor and saying, well, okay, look, how much money do I need to have in my short-term requirements, my needs, my goals, or my living expenses? What do I need for the medium term? And this is the long-term stuff that I need for, 3 years, 5 years, 7 years down the track. Regularly invest, irrespective of where you are in the scale, whether you're 18 years of age or whether you're 65 years of age. Invest regularly, and at this point in time, is now, and in fact, one of the questions that we have is now a better time to invest than where it was 3 months, 6 months, and 12 months ago? And the answer is absolutely. So get in where you can, buy assets at a much cheaper price than what you bought them maybe previously as well. Reduce the potential risk. Diversification is key. So don't have all of your eggs in the one basket or in the one company. Recognize the opportunities. Downturns are not all bad. And it's very much glass half full or glass half empty. I think, as Lee was saying, 23rd of March, the lowest point in the market. Well, was that an opportunity missed, or was that the time to be able to, saying, oh, no, we need to get out of the market? So certainly not all downturns are bad, and they're not bad at all. They're actually fantastic opportunities to go in and actually grow your wealth for the longer term. Don't let emotions lead you astray. The long-term trend is up. when there's fear in the markets, when there's fear on the street, don't worry about the markets, fear on the streets, when people are fighting over toilet paper at Woolies, don't let emotions lead you astray. The long-term trend is up. And, as I was saying at the start, companies are in the business of making money. If you're in the right companies, you will do well. So don't let the emotions, oh, look, just because the market's fallen 30% and the stock's fallen, and it has, as we've just heard that some of those have made good comebacks over that period of time. Don't let your emotions lead you astray.